just thought I'd record a quick recap of my AU trade from Friday morning, as I think it was a very clean example with some good lessons within it that hopefully some of you will take some benefit from it. On the daily, we can see we are bearish overall. This is the swing high and this is the swing low. So the anticipation is eventually that this low will get run because it's a weak low because it hasn't achieved a new high. But we had a sweep of liquidity below this low, and then we've had a pretty decent pullback. It mitigated this daily demand, but it had already been mitigated twice before, so it wasn't something that I was placing too much weight on at the time. But since we had this sweep of liquidity, you can see that supply or demand has pretty much been in control, and we've been sort of making internal higher highs and higher lows. So obviously the daily takes a long time to play out, so it is very possible to play sort of the buys and sells within it, even though it is bearish. But we had a pretty decent reaction off this flip zone. It had already been mitigated here, but we have mitigated the EQ. Then you can see big wick, strong bearish candle, so we could have continued bearish from there, but then we come into this flip zone here, and it's a flip zone because it reacted to that wick, and then the reaction failed, and then it looked like it was holding, so we had a couple of daily bullish candles coming off that, so it made sense to sort of target this internal high, thinking that price is going to print an internal higher high, and then maybe mitigate this supply at the extreme of the range, and then we may get the next strong bearish leg to the downside in line with the daily trend. But obviously, as I said, the daily takes a long time to play out, so that we can obviously play buys and sells within that. On the 4 hour, the 4 hour was bullish as well, so let me take this back here. 4 hour was bullish as well. It was making higher highs and higher lows. We had a bearish 4 hour chalk coming off the daily supply, but then we come into the daily demand, and then we had a bullish 4 hour chalk. So the 4 hour internal and swing structure were both aligned, so it was very feasible to target this week high, thinking that the 4 hour trend is going to continue, which would obviously be a new daily internal high as well. Yeah, so internal swing both bullish, and then on Friday morning we pull back into this. It's a flip. Basically the whole range is a flip zone. I'll draw that on just so you can see it. It's alright. It's glitchy. So now you can see we come into it, we had the reaction, and the reaction failed, so that became sort of a flip zone. Now we had mitigated the whole range, so I was thinking, right, maybe it's done what it needs to do, and it's possible we can continue bullish from here. But it was also wary of the fact that we could push lower and mitigate sort of the refined pivot before we get the next leg to the upside, so I wasn't completely ruling out sells. And then in support of sells as well, we hadn't really hit on it clear like these wicks, the flip wicks or whatever, but we did sort of hit the whole sort of buy to sell range, so it wasn't out of the question that we could continue bearish from there. So it does add more confidence to the shorts. And then that's the 4 hours. So the 4 hour internal swing both bullish, so obviously if you're looking for sells in the M15, it's obviously heavy counter trend. And then on the M15, when I came to my desk on Friday morning, we had this sort of price had mitigated this demand, and we had a V-shaped recovery in an M15 chalk. So at this stage I was just looking for buys, and because like everything was bullish at this stage. M15 swing internal, 4 hour swing and internal, daily internal are all bullish. This was the M15 low, and this was the M15 high. So what I was anticipating at the start of the London session was basically price pulling in here and then maybe getting the next leg to the upside to take that high. But then I was watching it develop, and it's quite hard to see this, but this candle failed to break the previous candle's high, so that becomes sort of a high, sort of a call it a sort of a sweep. Then you see the next candle breaks the high, meaning this is your active internal low, meaning that's your chalk line. And then you see the next candle takes it. So now we have a bearish M15 chalk. Now at this point obviously I was looking for buys predominantly in line with the trend, but then when I saw the M15 chalk I was like, right, is there a bearish story I can build here? So first things first, you can see, right, it came off this inside bar. It's quite a clean supply zone, makes sense. So then, did that achieve anything? Well, you can look at this here. If you take sort of this wick as the demand, you can see we had the reaction to this sort of wick. It tried to push price up, it failed to close above the high, so it failed to do its job, which means that's a failed reaction. So the inside bar is a flip zone, which makes sense to look that there's going to be a decent amount of supply within that, and then it supports a short trade. So that's an M15 flip. We had the M15 shock. So now at this point, this is our M15 supply. So I'm looking to get short within here. So I'll drop down to the M1. On the M1, we had this sweep of sort of the equal highs, and then we had a lot of momentum into the M15 POI. We sort of hit the refined M1 POI within it. Then price pushed back down. We had the reaction to the demand, which is sort of this whole range. Then you can see the reaction swept liquidity, and then the reaction failed, and we had an M1 shock, and then an M15 shock. So it's like, right, there's a lot of bearish confidences lining up here. I've built the story from sort of the 4 hour M15 down, and then I'm looking, right, how can I get short in here? Now, this POI, it's extreme unmitigated POI. It's a flip zone. It swept liquidity. It makes a lot of sense to leave a limit order there. Technically, this is sort of where things can get a bit complicated, and I've noticed it's a bit of a problem in the community. Technically, this is a risk entry, as the M1 has to switch bullish to get back there. But I'm loath to call it a risk entry, and I think we need to come up with a new name for it, because to me, a pure risk entry is just leaving a limit order on that POI with absolutely no confirmation whatsoever. Whereas you can see here, we have a lot of bullish or a lot of bearish confidences, and this is the extreme unmitigated POI. So if this doesn't hold, in my eyes, well, the whole trade thesis is wrong. I got it completely wrong. I'm happy to accept the risk. So I just put my limit there, 2 pip stop. You could have been safe and put it above this high, but I was sort of happy enough that the extreme had already been mitigated, this swept liquidity. So I was pretty confident that if this was going to play out, this zone was going to hold, and I was happy to sort of leave my entry around the EQ. So I'll play it forward here. You can see there's your bullish shock, just whenever this high gets taken, and then basically comes up with a lot of momentum. And this is something I've been trying to get better at, is basically leaving a limit on the extreme, basically getting braver with it, because I've noticed that there was an example on EU, I think it was Monday or Tuesday, basically where price just hit the extreme and went, and there was no confirmation entry. So it's obviously safer, because the M1 has to switch bullish to get back there. It is safer to basically wait for the entry model to set up, the sweep liquidity shock, and then enter on the extreme there. That is safer, but a lot of times when it hits the extreme, it just goes, and you can see here, it's like you wouldn't have got a confirmation entry either. So it's like, to me, I think it's worth the risk, just leaving a limit on the extreme on a lot of the occasions. And then say if you've an unmitigated extreme like this here, and then say you've a flip there, then maybe say, right, I'm going to leave the limit on the extreme and play the confirmation entry from the flip. But it is worth the risk, I think. So that is something I'm trying to get better at. Basically, this here and the M1 continuations are pretty much my main focus for the moment, trying to get better at them. And yeah, it was 9.85 or to this M15 POI. Depending on how you manage it, whether you took partials or whatever, how much you actually banked from it will vary. So there's no point going into too much detail with that. Now obviously I left a good bit of profit on the table here because price did go far lower, but this was a pretty clean POI in my eyes. M15 swing was bullish, 4 hour internal and swing were bullish, so price could easily have hit that there and continued higher, and this just been a short term pullback, and I was more than happy to bank me profit there, because I don't even, you could have got a decent pullback from there, and price could have pulled the whole way back up and say mitigated that there and then continued bearish, but I don't really want to hold through that on a Monday morning or a Friday morning. I'm just happy enough to bank me profit and get on it. Obviously I did leave a lot of profit on the table, but I'm happy. On a lot of cases, like, you're going to end up giving 10 or back to the market there, and it's just not worth that. I'm sort of slightly old school. If I can bank between 5 and 10 or without a lot of stress, I'm more than happy to do so. Yeah, so that was that. It's a nice trade. Just I was getting a lot of questions about this POI here, this one here, the swap liquidity. And there's a couple of key sort of mini lessons within it, so I'll fast forward down to here. So you have people looking to get long within this zone. Now this zone makes a lot of sense. It's a flip zone. It obviously reacted to something within here, and then it caused the flip. It swapped liquidity. caused the boss. It makes a lot of sense. Now the trades were during the London lull. I think they're just after 10 a.m. and I'm really not a fan of trading during the London lull on Aussie dollar, even more so than euro dollar. I really just found you get a lot of false signals, you get a lot of false chocks, and you can lose 2 or 3 or very quickly, and you just ask yourself, why was I even sitting on the screen during the London lull? But the key sort of mini lesson here is, I'll show you these couple of entries. You know, again, this entry meets the criteria. You had the sweep of liquidity below this low. M1 chalk, V-shape recovery, pulled by a bit of inducement in front of it. Like it is a pretty clean entry model. 2 pip stop would have got you tagged. Yeah, you wouldn't have got it to break even in this case because it didn't get to 4 or unless you moved it to break even whenever you get that M-boss. There was also a double confirmation entry here where sort of you get the chalk coming off that and then puts in a new internal high, and then that's a valid entry there as well. But the key sort of thing here is on the M15. You have to ask yourself who is in control at this present time. As you can see, we're coming into this POI, and yes, POI is more valid as pro trend and a lot of time frames. It is an awful lot going for it. But you have to ask yourself who is in control at this point. And it's quite clear. We had this reaction to demand, caused an M15 shock, so it did its best to put in a new high, but then it reacted to this flip zone here, and then we had a bearish M15 shock, and then we've had a lot of momentum down, and you can see we reacted to this demand. You can see the wicks there, small reaction, price then pulled back in to mitigate that sort of flip zone, continued lower, and the same thing happened here. Basically we reacted to these wicks, had the reaction, and then the reaction fails. So that's an M15 flip zone. So then when you drop down to the M1, and see you're basically trading the M1 entry model against the internal trend, and then right, fair enough, down here you can say, right, there's a good chance it's worth the risk. There's a good chance you can get it to break even before it hits the M15 supply, because it's hard to sort of predict that it's going to hit the, it's going to tap it to the pip and then go. But then with a double confirmation entry, it had mitigated the M15 supply, and M15 supply was in control because the internal structure was bearish. So you were trading against the internal structure, and we had mitigated the M15 supply. And then you can see in the M15 as well, it was possible. We had this big M15 range, we had this clean unmitigated POI at the extreme, swept liquidity. It was very possible that the internal structure could just keep going like that there, and then come in here, and then say might get the M15 shock here, and then when you get the M15 shock, then you can go, that'll be your M15 shock, and then that'll be your new M15 supply. So there was more room for price for the internal trend to continue bearish, so it made sense that we could continue lower, particularly with all the momentum. Now you could you can keep it as mechanical as possible and say, right, I'm going to play the M1 entry model inside every pro trend M15 POI in the premium of the discount, for example, like with the M1 or with basically the February challenge. You can do that, but it's just you have to ask yourself the bigger picture. Do I really want to trade against this momentum on the internal trend when it's possible the internal trend can continue lower? The safest thing is to wait for an M15 shock, and I would have personally waited for an M15 shock. Now here, if you got the M1 entry model in this POI, you can say, right, if this POI doesn't hold, the whole trade thesis is wrong, and the M15 trend is going to change. That's where you can sort of be a bit more aggressive with your entry model and be more confident and say, right, well, if this doesn't hold, the whole thing's wrong and everything's going to change, so this is where I'm worth the risk. So you just have to ask yourself, do you want to trade against the internal trend when it's that clear and it's that bearish and there's a lot of momentum to the downside? That is pretty much the lesson there. But I just got a few DMs about that there, and it's one of the things I struggled with when I was learning this strategy, is that it's easy to say, oh, but the M15's bullish, so you're just every M15 POI you're gonna try and get long. But it's about being able to sort of read the internal trend as well, and being able to say, right, maybe this isn't the best area to trade the M1 entry model. I'm going to wait for an M15 shock just to show me that things have changed. But yeah, that's the trade. It was a pretty clean counter trend long, or counter trend short, sorry. Obviously I left a lot of money on the table, because if I could have targeted that week low, or targeted the low, obviously could have banked a lot more, but I was more than happy to just take my profit for a Friday morning. Anyway, hopefully you take some value from that, guys. If you have any questions about anything within it, just drop me a message on Discord, or drop it in one of the questions channels or whatever, and I will get back to you. Thanks, guys.